Hello and welcome to 3.TV. I am Ruchi Sharma. The digital asset market has entered a decisive growth phase driven by rising institutional participation, expanding treasury allocations, and a surge in crypto-linked IPOs. As stablecoins gain global traction and on-chain finance evolves, the landscape is shifting towards deeper adoption and liquidity. In this conversation, we'll explore what's fueling this momentum and where the next wave of opportunities lies with Mr. Vikram Rangala, Executive Director at ZebPay. Welcome to 3.TV, Mr. Rangala.
Thank you. Glad to be back again. Thank you.
So the Diwali asset market has more than doubled since last Diwali, with Bitcoin surging from $55,000 to over $120,000, a stunning 120% rise. How would you define the current market cycle, and where do you see the broader market heading in the run-up to the next Diwali?
You say surprising or startling, but for those of us who follow Bitcoin, I mean, I'm a diehard Bitcoiner. It's not a surprise. It's going to happen. Bitcoin will continue to go up. We may see a correction sometime in the coming months.
Okay.
But next Diwali, will be a continuation. It's hard to say exactly where the cycle is, but I can tell you 3 or 4 Diwalis from now, Bitcoin will certainly be probably another double. Something over $200,000 a Bitcoin. That's fairly likely. For the rest of the market, it's as you said. I think the story is all the non-Bitcoin use cases in stablecoins, tokenization, those kind of things. And I know you want to talk more about those as well.
Right, exactly. So treasury adoption of digital assets is also accelerating. So MicroStrategy pioneered the trend, but now we are seeing a wave of corporates and funds following suit. How do you view this evolving phase of institutional accumulation, and what could it mean for market stability and liquidity ahead?
It's overall positive. In fact, in our group at ZebPay, we have a treasury project as well in Solana. And we're also, I have my friends at JetKing, they're also building a kind of Indian version of MicroStrategy. They're also doing a Bitcoin digital asset treasury. And, it's still, the government here in India is still evolving in its understanding of what these are and whether to have SEBI license them or somebody else. But I think it's just a matter of continuing dialogue and education. Right. How it affects the market is inevitably some big players were going to come in as giant buyers. I tend to feel that my belief is Satoshi Nakamoto created Bitcoin so that everybody could have a little bit.
Right.
Not so that we could once again have a few giant haves and a whole lot of have-nots. So that said, you can divide one Bitcoin into 100 million Satoshis. So I think there's still room for everybody to have Bitcoin, have some of the other quality assets like Ethereum, Solana, and a couple of the others. I'm not really that involved with a lot of the smaller altcoins and meme coins. Those are kind of part of what's going to happen along the way. It does show that there's a lot of understanding that this is a valuable asset. It's not a fad. MicroStrategy is not trying to do some quick 5-year play and then get out. In fact, Michael Saylor has said he's never selling the Bitcoin.
Right.
I'm never selling my Bitcoin. A lot of people, big and small, have that attitude. So if anybody is still wondering if Bitcoin is here to stay, if crypto is just a fad, the evidence is very clear.
So we are also witnessing a sharp uptick in crypto-linked IPOs with exchanges, infrastructure firms, and even mining and AI data companies going public. So do you think this signals the start of a new public market era for digital assets? And what impact could this have on valuations and investor participation?
These are companies that are treating AI and blockchain as tools, and in some cases as selling points. We saw a wave of companies all saying, so what are you doing with AI? And in the last couple of years, I think if you were an entrepreneur trying to pitch to a venture capitalist, one of their first questions would be, so what are you doing with AI? Do you have AI in there? And so, anybody with any kind of app would say, AI-powered, contact app, AI-powered, anything app, makeup app, clothing app, it doesn't matter. So part of it, like with any new technology, is that it's a buzzword. But there's also some serious work going on Whether all the IPOs are genuinely, I mean, as with any flood of IPOs, a few of them are going to win. So there's going to be what they call creative destruction. So some of these IPOs, they may get funded and fail. Some of them may not get funded and fail. There will be a mix. But we know a few things that are solid about the technology. One is that when you pair blockchain with AI, so that an AI has a blockchain as its core for data storage and data access, it multiplies what you can do with that AI. And so in a lot of ways, people are working on, you see blockchain experts who are quickly becoming AI experts and vice versa, because people want to be skilled in both. And I have friends who are skilled in both, and they're doing really exciting work. So as for individual IPOs, everyone should go and, read the literature, study the technology, and, investors will have hits and misses in there. But overall, the technology is coming, and there will be some companies that do really well with it.
So there's also a lot of buzz around stablecoin market. The stablecoin market cap has crossed $300 billion, and projections suggest it could hit $1.2 trillion by 2028. How do you interpret this growth, and what role do you see stablecoins playing in global trade and on-chain finance in the next few years?
It's remarkable how quickly stablecoins have introduced themselves into core processes. I was just talking with someone last night about how Tether, the company behind USDT stablecoin, is, I think, the fourth or fifth largest holder of US Treasury bonds now.
Okay.
Larger than the holdings of some companies, of some countries in their foreign exchange reserves.
Wow.
So if you think about that, Tether is essentially just a piece of software code that is running on, hundreds of thousands of computers all over in order to facilitate creating these smart contracts for virtual digital assets that are guaranteed to be backed by the equivalent of $1 of value somewhere in Tether's treasury or in their holdings or in these bonds. So if there's that much interest, and a software program to scale just has to be copied, and you can copy and paste software in seconds. So that's why it's grown so much faster than previous cycles and previous technology adoptions. Now, I think people are talking about using stablecoins for interbank settlements, which is a huge amount of volume. The settlements that banks do overnight to kind of help each other pay their bills, so to speak. They borrow again, from one to the other, and then pay back in the next morning or the next 24 hours, and that kind of a thing. Obviously, that's much easier to do with a stablecoin because there's just fewer steps, and the blockchain guarantees that all the transactions are the way they said they are, and it's relatively tamper-proof. So it makes sense that people are quickly doing that for between banks, within companies, and soon even within countries or between countries. I think there's a lot more, from what little I understand, there are a lot more applications of stablecoins that have yet to be adopted. So yes, there's a long way to go and a lot more to the story coming.
With major players like BlackRock, Fidelity, and Grayscale deepening their exposure, are we entering a phase of mainstream financial integration where digital assets become a standard portfolio component rather than an alternative bet?
It's interesting. Some people are beginning to see that who were not long-time crypto believers. Even people who were skeptical 3 or 4 years ago are now seeing that Bitcoin is not something dangerous to have. And they very quickly are flipping to say, how do I get Bitcoin in my portfolio? I get asked this question probably every other day by somebody, and these are HNIs in many cases, or people who work for companies that want to put Bitcoin on their balance sheet. We've done that for probably 8-9 years. We've had it, and it is a useful thing to do for any company. So and we continue to give advice to companies on that specific thing. In many cases, I'm finding that the individual people, the vice presidents or some of the CXOs at that company, have been longtime Bitcoin and crypto investors, and they're trying to drag the company to do it on the company's balance sheet. And sometimes it's vice versa. I've talked to people who say, no, I personally don't want to invest in this, but I know our company needs to. And I said, well, if you know your company needs to, why aren't you doing it? He said, well, maybe I will. There's still, but I think even the skeptics are realizing, okay, this is here, it's inevitable, and they don't want to miss the boat, so to speak.
Right.
So yeah, it's happening. It's going to continue to happen. And I think the main thing I feel concerned about, and at ZebPay, we're big on having people not be traders so much as long-term investors. We're trying to tell everybody, just take 1% of your savings and start an SIP, and just, every Friday, just buy 100 rupees worth of Bitcoin, maybe 100 rupees worth of Ethereum if you want to do a little more, and just honestly, if you do nothing else for the next 10 years, but every Friday, buy a little bit of Bitcoin, 10 years from now, you will thank yourself, and your life will actually be different than what it would have been otherwise. It's that powerful.
So beyond Bitcoin and Ethereum, which emerging sectors or ecosystems like DePIN, AI tokens, or RWA platforms do you believe could define the next wave of market leadership?
I think all three that you mentioned are going to be factors. I think they're solid technologies, and they have a wide range of real-world use cases. And I'm skeptical of anything that just seems like financial engineering to give wealthy people one more kind of asset to, get wealthier on, without a real underlying use case for the masses, so to speak. But something like real world assets, tokenization, you can tokenize commercial real estate in Dubai, or, jewelry or other things. You can tokenize, $100 million works of art for people who like that kind of stuff, wealthy people. But the same technology can be used to guarantee land rights to farmers so that they can have a digital token that says, this is my land and here's the proof, and nobody can alter that. So you can also guarantee supply chains so that you can see that from point A to point B, the supply chain was not tampered with. The product is still exactly as it was when it came out of the factory. All those kind of things are, they're not exciting and glamorous, but those are part of our infrastructure. And so things like real world asset tokens, even DePIN, and certainly stablecoins, which we talked about, these are introducing themselves into our economic infrastructure. And I'm not saying this as advice for anybody else, but when I'm looking to see what should I spend my time learning about, because it's going to be around for at least another 5-10 years, I look for things that are going to become part of our day-to-day lives and not just speculative assets.
Right.
And I think these, particularly real-world asset tokens, I met a lot of companies in Token 2049 in Singapore. I think the big two things this year at the conference were stablecoins and real-world asset tokenization. And I had a chance to meet a women-led company doing real-world asset tokenization. And they recognized me because they were ZebPay customers. And we had a long conversation sitting at their booth, and by the end they asked me to join their advisory board. So I'm going to be personally learning more about it, I hope. And I think it's exciting also because I'm excited whenever I see a women-led company getting into crypto, because it is so male-dominated, first of all.
Right.
And I think that misses a lot of point of view. But the other thing is, we're talking about basic assets like land and homes and utilities like electricity. And I think women understand these in a way that men maybe don't. So it's good to see that as well.
So according to you, what was the reason behind the recent flash crash, and which altcoins should the investors eye?
I'm a professional trader, and I am the sort who's called a technical trader. I don't really look for the news or for reasons why the market's moving. But any of us who were watching, when something goes up, inevitably it's going to correct downwards.
Right.
And Bitcoin was going up and up and up. So I was watching for a correction. Knock on wood, I was hedged and protected against the correction. And so were a lot of others. In fact, once you start to understand the markets, you have to understand the market didn't crash because everybody just got scared and ran away from it. The market went down because for every person who was selling off, remember, somebody was buying. And
Right.
there are what are called short sellers, people who sell at the top, buy it back at a lower price, and then take a profit from the difference, right? So short selling is something maybe beginner traders don't understand, but professionals do. Somebody was shorting that crash because a crash that happens that fast, it literally happened overnight, actually
Yes, it
within
did.
a couple of hours, means somebody with a lot of capital shorted that thing down.
Right.
It didn't just happen by chance. And it didn't happen because somebody tweeted something or some news item happened. It's because somebody was waiting for the right opportunity and saw a
that.
change in the liquidity, shorted it down, bought it back probably. But one thing I can tell you is while a lot of people did lose money in that correction, let's not even call it a crash, let's call it a correction.
Okay.
Somebody made a lot of money. In fact, a lot of us made money from it. And a lot of people make money from every crash and correction. So it's important for anybody who's investing and trading to understand those kind of things.
So great, sir. Thank you so much for having this conversation with us and for giving us your valuable time.
Thank you. Thank you.
Well, that's all in this conversation for now. This is Mutu Sharma signing off. Keep watching 3.TV.